All right, let's talk about an electric vehicle company that's been on one of the wildest rides you can imagine, NIO. At one point, it was the absolute darling of the EV world. Then it hit a major slump. But now, well, the numbers are starting to tell a very different story. So are we looking at a massive comeback here? Or is this just a temporary flash in the pan? Let's dive in. But first, real quick, let's get this out of the way so we're all on the same page. It's not NIO. It's NIO, pronounced NEO. Got it? Awesome. Now that we've got that sorted, let's get to the good stuff. You know, for a while there, NIO was the name to watch. It even earned the nickname the Tesla of China, with its super premium cars and really cool ideas like battery swapping stations. But things changed. So the big question we're really digging into here is this. Does NIO still have what it takes to get back on top in this crazy competitive EV market? To really get why this comeback story is so interesting, you first have to understand just how far they fell. And we're not talking about a little dip here. This was a pretty dramatic tumble from some seriously incredible heights. Just look at the scale of this swing. It's pretty remarkable. Back in early 2021, at its absolute peak, NIO was valued at over $100 billion. Then, that was followed by 4 straight years of losses for investors. Ouch. But then, last year, something shifted. The company finally broke that losing streak, and it ended the year with a 17% gain. That's definitely a glimmer of hope. So was that 17% gain just a fluke, or was it the start of a real, honest-to-goodness turnaround? Well, let's dig into the hard data, because the recent numbers are pretty compelling, I gotta say. Okay, first up, a huge production milestone. NIO has now built over 1 million cars. In the EV industry, where building things at scale is incredibly expensive and difficult, hitting that million car mark is a massive deal. It basically proves you're a serious player. And they're not just building cars to sit in a lot, people are buying them. In the fourth quarter of 2025, their deliveries just exploded. They shot up by almost 72% compared to the same time last year. That's not just growth. That's a sign that customers are getting really interested again. And all that demand is starting to show up on the bottom line. The company's financial health is looking a lot stronger. Their gross margin is up, which means they're making more money on each car they sell. Their net loss has been cut by nearly a third, and they're sitting on a nice cushion of $5.1 billion in cash. These are all signs of a company that's really starting to get its house in order. So, with all this new momentum, what's next? What's the plan? Well, NIO has laid out a super clear and, I'll say, very ambitious strategy to not just keep growing, but to finally become profitable. Here's the game plan in 3 steps. First, they're keeping their foot on the gas, aiming for 40 to 50% growth in volume. Second, to help make that happen, they're launching 5 new models to appeal to more people. And third, this is the big one, the holy grail for any EV startup: achieve full-year profitability. Now, that little non-GAAP thing just means they're looking at their core business health without some one-off expenses. It's a clearer picture. And that profitability goal, that is so crucial. Like this quote says, just getting to break even would be a massive win. You have to remember, the EV industry is famous for just burning through mountains of cash. So for NIO to actually hit that target, that would be a complete game changer. Now, NIO isn't trying to do all this in a vacuum. The company has a huge advantage. It's home turf. China isn't just another country selling cars. It is the absolute epicenter of the EV revolution, and that's creating this powerful tailwind for NIO. Get this. In December, over 60% of all new cars sold in China were new energy vehicles, so either electric or hybrid. 60%? That scale of adoption is just staggering, and NIO is sitting right in the middle of the world's biggest and fastest-growing EV market. And that incredible growth is no accident. A big part of it is government policy. In China, you have really strong government support for these kinds of vehicles. Meanwhile, in the US, key tax credits have been pulled back, and demand has kind of sagged. So for NIO, this home field advantage is a really big deal. Okay, so we've got a compelling comeback story, a clear plan, and a super supportive market. Sounds like a total slam dunk, right? Well, not so fast. Wall Street is actually deeply divided on this one, and this is where the picture starts to get a little more complicated. When you look at the analyst ratings, you see a lot of caution. A huge 66%. That's 10 out of 15 analysts covering the stock rated as a hold. They're not saying sell, but they're definitely not convinced enough to scream buy from the rooftops. It's the ultimate wait-and-see situation. And you can see this division even more clearly when you look at what they think the stock is worth. Barclays says it's worth $4. JP Morgan, on the other hand, says $8. That is a massive difference of opinion. The average is around $6, but that huge range just shows you how much uncertainty is out there. So what's making everyone so cautious? Well, here are the main risks. There's an ongoing lawsuit in the US alleging that they inflated their revenue. Their valuation gets a failing F grade from Zacks. The EV market is just brutally competitive, with giants like BYD and scrappy rivals like XPeng all fighting for the same customers. And even though its price-to-sales number seems low, all these other things are casting a pretty big shadow. And that brings us right back to our final question. On one hand, you have a company that's showing explosive growth, it's fixing its financials, and it looks pretty cheap on paper. But on the other hand, you've got serious legal risks and just insane competition. So looking ahead to 2026, does the potential reward from this comeback story outweigh the very real risks? That's the billion-dollar question for anyone watching NIO.